When we think of billionaires, we often wonder how they manage to grow their wealth while seemingly paying so little in taxes. It's not magic, it's strategy. Understanding this could change how you approach your own finances. 1. The concept of asset-backed borrowing. One of the most common strategies billionaires use is borrowing against their assets rather than selling them. Why? Because selling assets triggers capital gains taxes, while loans do not count as taxable income. For example, a billionaire with $100 million in stocks can use those shares as collateral to secure a low-interest loan without selling a single share. This allows them to access cash without reducing their ownership or paying taxes on capital gains. Essentially, they're living off borrowed money, which can be significantly cheaper than paying hefty taxes. For instance, if the loan interest rate is 2% but their stock portfolio grows at 8%, they're still profiting by 6% annually. The average person rarely considers this because they don't own assets on the same scale. But even smaller investors can adopt similar tactics with home equity loans or margin accounts for stocks, though it's critical to understand the risks involved. Imagine the advantage of never needing to liquidate your investments. Your wealth continues to grow, and you maintain control over your assets. Billionaires have mastered this approach, which allows them to avoid taxes legally while still funding their luxurious lifestyles. 2. Tax code loopholes and depreciation. The U.S. tax code is riddled with provisions that benefit asset owners, particularly real estate investors. Depreciation is one such provision. It allows property owners to write off the wear and tear on their buildings, even if those properties are increasing in value. For example, if a billionaire owns a commercial building worth $10 million, they can claim depreciation as an expense, reducing their taxable income significantly. This paper loss often offsets any actual income they generate from the property, resulting in little to no tax liability. Depreciation isn't just for billionaires, it's available to anyone who invests in real estate. Yet, few people fully understand how to use it. Combined with loans taken against the property's value, this strategy enables billionaires to continuously acquire more assets without increasing their tax burden. It's a cycle. Buy property, claim depreciation, borrow against the asset, and repeat. Over time, this builds massive wealth while minimizing taxes. By understanding how depreciation works, you could make smarter real estate investment decisions and potentially reduce your own taxes. 3. The step-up in basis advantage. Another powerful tool billionaires use is the step-up in basis rule. This allows heirs to inherit assets at their current market value rather than the value at which the original owner purchased them. The result? A significant reduction or elimination of capital gains taxes for the heirs. For example, imagine a billionaire bought stocks for $10 million, and those stocks are now worth $100 million. If they sold the stocks, they'd owe taxes on $90 million in gains. However, if they hold on to the stocks until their death, the heirs inherit them at the $100 million valuation. They can then sell them without paying taxes on the $90 million gain. This strategy is why billionaires focus on building generational wealth. By passing on their assets, they ensure their families continue to benefit from their wealth while avoiding a large portion of taxes. The step-up in basis is one reason wealthy families retain their fortunes for generations. It's also why understanding estate planning is crucial for anyone looking to secure financial stability for their descendants. At this point, you might be wondering how to apply some of these strategies to your own financial situation. While not everyone has billionaire-level assets, the principles of smart investing and leveraging the system can work for you too. Check out our video, Tips to Double Your Money Fast, in 2025, 5 Proven Strategies. The link is in the description below. It's packed with actionable advice to grow your wealth. If you're finding this content insightful, don't forget to hit the like button, subscribe, and share this video. Your support helps us continue to deliver financial tips and strategies to empower viewers like you. What's one financial strategy you'd like to learn more about? Drop it in the comments. 4. How loans maintain wealth growth. Billionaires often use loans to fund their lifestyle or invest further, ensuring their wealth continues to grow. Unlike ordinary consumers who borrow for depreciating assets like cars, The wealthy borrow to acquire income-generating assets. For example, a billionaire might borrow millions to invest in a business, buy more real estate, or acquire stocks. The returns on these investments typically outpace the loan interest rates, allowing their net worth to grow even faster. Additionally, because loans don't count as income, billionaires avoid higher tax brackets. This strategy keeps their tax liability low while still providing liquidity to maintain their desired lifestyle. The average person can apply this lesson by focusing on using debt wisely. Instead of financing liabilities, consider borrowing for investments that generate cash flow or appreciate in value. The key is to understand the difference between good debt and bad debt. 5. The importance of financial literacy. The strategies billionaires use may sound complex, but they all boil down to one critical skill: financial literacy. The wealthy invest time and resources in understanding the tax code, investment strategies, and estate planning. This is an area where most people fall short. By improving your financial education, you can uncover opportunities to grow your wealth and reduce taxes. Books, courses, and financial advisors can help you understand these principles and apply them effectively. Financial literacy is the great equalizer. While not everyone can become a billionaire, anyone can learn to make smarter financial decisions. By doing so, you'll not only grow your wealth, but also secure a better financial future for yourself and your family. 6. Philanthropy as a tax shield. Philanthropy is often seen as a noble act, but for billionaires, it's also a strategic financial move. Donations to qualified charities are tax-deductible, reducing taxable income while creating goodwill and public relations benefits. For example, billionaires like Warren Buffett and Bill Gates pledge significant portions of their wealth to charitable foundations. These donations not only reduce their immediate tax liabilities, but also allow them to influence how their money is used, often supporting causes they are passionate about. Charitable giving through donor-advised funds, DAFs, is another popular strategy. These funds let donors receive an immediate tax deduction while granting them the flexibility to distribute the money to charities over time. It's like setting up a personal charitable foundation without the administrative burden. On a smaller scale, anyone can use philanthropy as a tax strategy. Whether it's donating to local charities or setting up recurring contributions to causes you care about, you're not only making a difference but also potentially reducing your tax burden. The key takeaway is that philanthropy doesn't have to be purely altruistic. It can also be a powerful tool for financial planning. The next time you consider a charitable donation, think about the dual benefits it could bring to both your community and your finances. 7. The power of offshore accounts and shelters. Offshore accounts often sound like a shady tactic, but when used legally, they are another tool billionaires use to protect their wealth. Countries like Switzerland, Singapore, and the Cayman Islands are popular destinations for offshore accounts due to their low taxes and financial privacy laws. For instance, multinational corporations and billionaires alike use offshore entities to reduce their tax exposure. By strategically placing profits or assets in countries with favorable tax laws, they legally minimize their tax liabilities. This practice, often referred to as tax optimization, is a standard part of global wealth management. Offshore accounts also offer asset protection. In the event of lawsuits or economic instability, these accounts can shield wealth from creditors and even governments. While these benefits are generally out of reach for the average person, they underscore the importance of diversifying assets and understanding international financial opportunities. However, it's critical to understand the legalities surrounding offshore accounts. Misusing them can lead to severe penalties. Always consult a legal or financial expert before exploring international banking or investment options. 8. Tax loss harvesting for investments. Tax loss harvesting is a lesser-known yet highly effective strategy billionaires use to minimize their tax liabilities while maintaining their investment portfolios. This involves selling investments at a loss to offset capital gains and reduce taxable income. Here's how it works. Imagine a billionaire has a portfolio with a $1 million gain in one stock, but a $500,000 loss in another. By selling the losing investment, they can offset the gain, reducing their taxable income by the amount of the loss. The result? A significantly lower tax bill. This strategy isn't just for the ultra-wealthy. Individual investors can use tax loss harvesting in their taxable accounts to save money. For example, if you have losses in one stock, but gains in another, selling the losing stock before the end of the year can offset the gains and lower your tax bill. To make this strategy even more effective, many investors reinvest the proceeds from the sold asset into a similar but not identical investment. This ensures they maintain their market exposure while taking advantage of the tax benefit. By understanding and implementing tax loss harvesting, you can optimize your investment strategy and keep more of your hard-earned money. Even small adjustments in your portfolio can lead to substantial tax savings over time. Billionaires don't grow and protect their wealth by chance. It's a combination of strategy, knowledge, and leveraging the tools available to them. Whether it's borrowing against assets, utilizing depreciation, or engaging in philanthropy, these financial moves are legal, calculated, and highly effective. Want to learn how to apply these strategies and more to your own finances? Our next video, Tips to Double Your Money Fast, 5 Proven Strategies, will provide actionable insights to help you build wealth quickly and sustainably. Don't miss it. Click subscribe, turn on notifications, and prepare for a transformation in your financial journey. This video is for informational purposes only and does not constitute financial, legal, or tax advice. Please consult with a financial advisor or tax professional for personalized guidance.